Welcome to Living Your Wealth Today and Tomorrow, the show where we explore how to enjoy the wealth you've already built, as well as how to best plan for a successful financial future. I'm your host, Kelly Ennis, founder and president of Infinity Financial Strategies. Did you know that it's possible to go into tax season without anxiety because you already have a plan and you know exactly what to expect? Welcome back to Living Your Wealth Today and Tomorrow. I'm Kelly Ennis, your host. In this episode, we're going to talk about how planning can ease the discomfort of tax time. For so many families, April brings stress. They send everything to their tax preparer, cross their fingers, and hope they won't be hit with a big surprise bill. That uncertainty creates unease, and for some, it actually creates dread. But it doesn't have to be that way. We're recording this episode in September of 2025. And that timing matters, because with 1/4 of the year left, you still have time to prepare, time to make adjustments, and time to replace that anxiety with confidence. Think of these next 3 months as your opportunity window. By the time New Year's Eve rolls around, you'll want to know you've already made the right moves, gathered the right information, making thoughtful adjustments, and taking specific steps that could help you save money on taxes, align your finances with your goals, and most importantly, help you feel prepared and in control. Yes, you've probably heard by now about the One Big Beautiful Bill Act, or OBBBA as it's being called. It was signed into law earlier this year, and it makes some big changes that will affect year-end planning going forward. We'll touch on a few of those changes today, but I want to set the stage clearly. This episode isn't about memorizing the technical details of a new tax bill. It's about using a process, a repeatable approach you can lean on every single year to take the mystery out of tax season. Because here's the thing, financial success rarely comes from one big decision. It's the result of a series of smaller, deliberate choices. And every time you make one of those choices, you feel a little calmer, a little clearer, and a little more in control. So, what's involved in this process? The first step is simple but critical. Gather the facts. When your financial information is scattered, it's easy to feel unsettled. But when you pull it all into one place, whether it's a binder, a digital folder, or even a neat stack on your desk, you start to breathe easier. You go from feeling overwhelmed to feeling a little more in control. So here's what to gather. First, records of your income. This includes pay stubs, including the final stub from any job changes this year. You'll also need records of your business or side hustle income. You'll also need records from any unemployment income. It's taxable, and including it in your planning now means fewer surprises later. Then, for your investments, you'll need statements from taxable accounts showing interest, dividends, and capital gains paid so far this year. And many mutual funds pay out large distributions in December. Build that into your expectations now so you don't feel blindsided in April. For your taxes paid, what's been withheld, and any estimated payments you've made, withholding will be on your pay stubs, and perhaps you had taxes withheld from any RMDs you took this year. Estimated payments help you stay on pace with what the IRS expects and can help you head off big bills at tax time. All right, remember your charitable giving, especially this year. We'll talk about the extra impact of charitable giving in 2025 in just a minute. Gather receipts or thank you letters. Having this ready not only helps with deductions, it also reminds you of the good you've already done this year. Get records of your state and local taxes. This includes property taxes you've paid, state income taxes, and in many states, car taxes or even registration fees. With the higher SALT cap from OBBBA, these may matter again. So keeping them organized now will reduce stress later. Do you have to adjust your saving and spending? Where are you relative to your plan? Is your saving on target for this year? Has spending crept higher? Seeing it clearly, without judgment, replaces uncertainty with awareness, and sometimes awareness is all you need to be conscious of your daily saving and spending. Now, your financial plan. Pull it out, dust it off, and take a good look at it. Goals shift over time. Reviewing them now keeps you grounded in what matters most. If you're on track, you'll increase your peace of mind. And if not, you can make adjustments to your day-to-day financial moves or even to your goals. Either way, you're being proactive with your finances. This step alone, gathering and organizing your information, increases a sense of calm. It transforms that vague, I hope we're okay feeling into, I know exactly where we stand. The next step in our year-end process is running a tax projection. Think of a tax projection as a weather forecast for your taxes. Anxiety thrives in uncertainty, but once you see the forecast, even if it shows rain, you feel better because you know what's coming and you can prepare. A tax projection answers, if everything continues as expected, how much tax will I owe or get back? So when doing your tax projection, remember to factor in year-end bonuses, December mutual fund distributions, any stock option exercises, business income, and remember to consider whether your dependents have changed. Maybe a child graduated and is no longer on your tax return. These new OBBBA rules add complexity, which makes it even more important not to guess. Use software or engage a professional to ensure you're taking into account the new provisions in this tax law. Having this tax projection that's specific to your situation is where confidence really grows. When you have a projection, you don't have to wonder anymore. Now, here's an important note. Don't assume that your tax preparer is doing this for you. Many preparers only look backward, not forward. If you ask for a projection and don't hear back, don't assume that no news is good news. It doesn't mean all good. It more likely means a tax projection was not included in your agreement. When you know who's running the projection, whether it's your advisor, your preparer, or you using software, you can replace some of that anxiety with clarity. I have seen families breathe a huge sigh of relief simply because they knew what to expect, even if the projection showed they'd owe money. If you know what's coming, you can make a plan to address it. The uncertainty's gone, and that's what really fuels peace of mind. On that note, numbers by themselves don't change anything. The relief comes when you use the numbers to take action. Think of this as turning the steering wheel instead of just sitting in the car. So here are some factors to consider depending on your situation. First, Roth conversions. By this point in the year, at the tax projection in your hand, you can get an idea of how a Roth conversion would affect your finances this year. We don't know what tax rates, or specifically your tax rates, will be in the future. Roth conversions can turn uncertainty about your future financial situation into empowerment. Paying taxes now, on your terms, gives you more options later. Especially in lower income years, or if you're over 65 and qualify for the OBBBA's temporary senior deduction, conversions can be a great way to give you long-term peace of mind. Another move to consider is pre-tax contributions. Bumping up your pre-tax contribution to your employer retirement plan lowers taxable income today and helps you feel like you're back in control of the tax game. Catch-up and super catch-up contributions give people in their 50s and early 60s an extra sense of security and an additional way to manage your current tax bill. But starting in 2026, catch-up contributions for high earners will need to be Roth contributions, so they won't help reduce your current tax bill going forward. And look at your charitable giving, especially in 2025. Structuring giving with bunching or using a donor-advised fund lets you feel both generous and smart. With new OBBBA rules coming in 2026, accelerating gifts now brings double satisfaction and will likely bring a bigger tax benefit. We'll talk further about this in just a minute. Review your withholding and your estimated payments. So if it looks like you'll owe taxes, adjusting your W-4, the form that lets your employer know how much to withhold from your paycheck, replaces the dread of an April penalty with the calm of knowing you've met your obligations as the year goes on. And finally, planning ahead means no surprises. If you'll owe, determine a plan for how you'll pay. And remember, most bonuses aren't guaranteed. So if your February or March bonus is your plan to pay your tax bill, be sure to have a backup plan. If you'll get a refund, Think now about how you'll put it to work in line with your goals. When you don't have a plan for that refund, it often just disappears into unintentional spending. Every one of these steps is a confidence builder. Each move chips away at stress and builds a sense of control. Since you're doing your year-end planning, let's get as much value from it as we can. Year-end isn't just about taxes. It's about making sure your saving and investing are aligned with your goals and values. For your savings, are you on pace? If you're behind, catching up now feels empowering instead of defeating. You still have 3 months to meet your savings goal for the year. How's your emergency fund? A solid cushion brings peace of mind like nothing else. Knowing you could weather 6 to 12 months of regular expenses or even a large unanticipated expense can really help you sleep at night. And your investment portfolio. Is it invested in line with what you're trying to accomplish and when? How about your specific portfolio allocation? When your mix of stocks, bonds, and cash matches the time horizon for your goals, you feel balanced. While too much risk can feel like you're riding a roller coaster. The right mix feels steady, even when markets aren't. How about your other goals? We've talked a bit about retirement planning with contributions to employer plans and Roth conversions. But don't forget the joy in planning for things like a vacation home or family experiences. Those savings give you something to look forward to, which is just as important as retirement planning for your overall well-being. And just being intentional with your money. When every dollar has a purpose, some for today, some for tomorrow, some for investing and building long-term wealth, and some for enjoying today, you can really thrive. This part of year-end planning isn't just about the numbers. It's about creating a sense of calm, purpose, and balance in your financial life. Now, I mentioned charitable giving earlier. Giving can be one of the most fulfilling parts of your financial life, and when you do it in a tax-smart way, it feels even better. OBBBA changes the rules in 2026. It adds 0.5% of your AGI floor for deductibility of your charitable donations, and a deduction cap for the highest earners. But it does also add a mini deduction for standard deduction filers. This year may be the best time to act. So, accelerating gifts into 2025 lets you capture deductions while they're still more generous and you don't have to meet that new floor. And by the way, this assumes that you're itemizing. The floor only applies to those who are able to itemize a charitable deduction. You could bunch contributions or accelerate contributions, and this means you get the joy of making an impact now and the relief of maximizing your deduction. To do this, you consider what you might have donated in 2026 as well as 2025 and contribute the total amount in 2025 and then perhaps skip the donation in 2026. This strategy can allow you a larger deduction. Then you can do the same again in 2027 with your 2027 and 2028 planned donations. But again, this applies if you're itemizing your deductions. Combining the 2 years, for instance, 2027 and 2028, makes it more likely that you'll exceed that 0.5% of AGI floor and therefore can deduct at least part of your donation. Donor-advised funds allow you to give and claim the deduction in 1 year, but ultimately decide where the funds go in a future year. So you get more control over the tax treatment of your gift. And then for folks who are at least 70 and a half and have IRAs, QCDs, or qualified charitable distributions, can help you achieve your charitable goals while minimizing the impact of IRA distributions on your adjusted gross income. This can help you feel more in control of not just taxes, but also Medicare costs and other income-based thresholds that apply on your taxes. And here's something deeper. Charitable giving can reduce stress, can increase well-being simply because it feels good. Research consistently shows that generosity improves happiness. When you structure it wisely, you get both the emotional reward and the financial benefit. So let's wrap it all up. The danger in financial planning is knowing without doing. You can gather, you can project, but if you don't act, nothing changes. And then April anxiety returns. But when you act, the benefits are both financial and emotional. You'll not only save money, you'll also feel calmer, more balanced, and more in control. So here's your year-end planning checklist. First, evaluate Roth conversions. They can give you a feeling of empowerment regarding your lifetime tax bill. Review your retirement contributions. These contributions help provide future financial security and can help you manage your current tax bill. Plan your charitable contributions. These help you increase your sense of purpose and impact. Make any necessary withholding adjustments to reduce your bill in April. Look at your portfolio for opportunities for tax loss and tax gain harvesting. This gives you more control and you're acting proactively. Review your FSAs or any other use it or lose it accounts and maximize your family's well-being. Assess your emergency funds and your saving and investing. These are the areas that can bring you peace of mind today and tomorrow. The real gift of year-end planning isn't just dollars saved. It's confidence gained. The peace of mind knowing that you're prepared, that you've taken care of what matters, and that tax season doesn't have to bring dread. This is Living Your Wealth Today and Tomorrow, and I'm Kelly Ennis. I hope today's conversation helps you feel more prepared, more confident, and a little lighter heading into the new year. If you found this helpful, share it with a friend or colleague who wants that same sense of calm. And don't forget to subscribe so you never miss an update. Here's to finishing this year strong and stepping into next year with clarity, confidence, and peace of mind. Thanks for listening to this episode of Living Your Wealth Today and Tomorrow. This podcast is for educational and informational purposes only. It is not tax, legal, or investment advice. Seek guidance from your legal and financial professionals before acting. For more insights on planning for your financial future, follow me on LinkedIn. And for more information on Infinity Financial Strategies, visit our website at infinityfinancialstrategies.net. If you enjoyed the show, please share it with a friend or family member who might benefit from listening, and please leave a review wherever you listen. Tune in next time for more tips and tricks on living your best life through financial planning.